Well, the Australian dollar just cracked parity last night, and tonight it's above 102, a huge rise in one day. On share markets, it's starting to look like we might be in for a Santa Claus rally. Certainly December has got off to a fabulous start, thanks not only to the decision by 6 central banks to cut the rate they charge commercial banks for money, but more generally a sense that the people in charge might be ending their dithering. Obviously, the main people the markets want to stop dithering are European politicians, to put an end to the panic in bond markets there. And there are tentative signs that they might act. Anyway, central banks have shown some leadership, and that spurred big gains on global share markets, with Wall Street up more than 4% and European markets up by up to 5%. Asian markets were slightly more subdued, but still very strong, and some of the biggest rises were seen on commodity markets, where copper jumped 5.3% and zinc 6%. And the other big central bank news today was that the People's Bank of China has cut its required reserve ratio, which refers to how much money the banks have to keep on deposit at the PBC and can't lend. It means China is now more worried about growth than inflation, and its easing cycle has officially begun. As a result of all this news, the Australian miners woke from their torpor and led the Australian market higher. BHP went up 4%, Fortescue 5.7%. The banks all rose 2.5% to 3%, and Qantas went up 4.3%, even though Virgin's tie-up with Singapore Airlines was approved by the ACCC, which will increase competition for Qantas. And finally, some poor economic data about Australia today. Retail sales are basically flat, building approvals fell a lot for the second month in a row, and manufacturing is contracting. That's finance.